Hello and welcome to Investing Confidential. Well, we've got our tech earnings coming in this week, just as expected, weak across the board. But folks, the worst is yet to come. I know I'm usually negative, but I do have a couple of bright spots around the world, which I'll spell out some interesting opportunities outside the U.S. But first, let's talk about the U.S. Let's talk about this GDP. You had U.S. GDP, the number was up 2.6%. Everyone's cheering. The market turned around. But look, you got, again, I keep telling you, you got to read between the lines. You got to look at the actual data. What drove this beat? Okay, exports was the driver. Trade. Trade had its largest contribution to GDP since 1980. Okay, again, exports, trade had its largest contribution since 1980. Why do you think that is? Okay, just take a wild guess. Now, they don't break it down, but I'm going to dig through the numbers. I pretty much have a feeling that defense exports and oil, energy, meaning shipping oil to Europe, shipping gas, all this stuff around the world, which is what we're doing, had a big contribution to this GDP. The consumer was a little bit better than expected, only because everyone was pretty negative, but that's not sustainable, okay? It's not sustainable. The dollar will continue to have a drag into the fourth quarter. So the fourth quarter numbers are going to be significantly worse than this third quarter. These numbers, again, were affected mainly by the export of energy and I think defense-related items. This stuff can't continue, especially if we see a change in the midterm elections where the Republicans are talking about cutting aid. So that means defense exports are going to decline. So all of this positive stuff that drove this GDP beat is going to all reverse. Now, the other negative thing about this is that, look, the Fed's looking at this and saying, "Hey, okay, we got room to raise more. The GDP is strong. We need to knock down inflation. Inflation is still sticky, very high in the Fed's mind. We know that inflation is coming down, but it's still very high. So 75 basis points. It is now baked in. Okay, 100% baked in, 75 basis points. They even talk about now 100 basis points, but let's say 75. Now, obviously, everyone's going to look for, okay, what's going to happen in the next meeting, at the last meeting at the end of the year? Most likely, the Fed is not going to talk about reducing. They just can't. They will lose complete credibility if they do. So the Fed's going to talk about continue rate rises, probably talk about indicating another 75, which is going to squash on all the pivot buyers, right? Pivot, no pivot. The Fed will pivot, but not anytime soon, especially with a GDP number at this level, especially with CPI continuing very sticky. It's going to come down over time. Probably by the end of the first quarter, we'll see, probably 5%, 4.5%, 5%, which will again give that the Fed will completely abandon the 2% goal and go to 5 or 4% and begin to talk about pivoting. But by that time, it'll be too late. The economy will already be reeling, and we will obviously be deep into a recessionary scenario, which we are in today, but the numbers are not saying it. Real estate's just declining, just starting to really come down hard. That's going to have an impact on GDP because that's going to impact the consumer. So enjoy this 2.6% while you have it. It's not going to last. Okay, let's talk about the tech earnings. As we discussed last week, they're all bad. Google, Microsoft, and obviously Meta. Amazon's coming, Apple's coming. I'll talk about that in a second. Okay, Meta. What was the problem with Meta? They obviously have FX headwinds, but the big problem here is a secular issue with Meta, not cyclical meaning if there was an issue that they could reverse it next quarter. Zuckerberg is intent on Web3 and moving to this sort of virtual reality business. The operating expenses, CapEx, massive OpEx going towards this meta universe. He doesn't care about the stock price right now. He doesn't care about declining ad revenues, which is obviously what they're seeing. Doesn't care about FX headwinds. All he cares about is this meta dream. And this is obviously costing shareholders a boatload. Meta has just broke the pandemic lows. I think we're going to see the entire market test the pandemic lows before we're said and done. That means we've got a lot more to go on the downside. But be careful of Meta here. I can't tell you whether it's cheap. I don't think anybody knows what really the valuation of Meta is. But if they continue on this road of spending a lot of money on this Web3, on this virtual reality, this quarter is going to be what we're going to see in the future for Meta. Okay, that's the bottom line. So just be careful. One thing I want to mention here, I mean, Morgan Stanley. I mean, this is typical of the whole Wall Street. Morgan Stanley downgrades Meta today. I mean, this is a joke, folks. This is a joke. This stock's been in decline for quite some time. People knew what Zuckerberg was doing. They knew it was going to be a drag, and yet now this analyst decides to downgrade Meta. And we see this all the time on Wall Street. These analysts are, they have conflicts of interest. Okay, maybe not financial conflicts of interest, but they're indirectly financial conflicts of interest because their salaries depend on the relationship their banks have with the companies. So they only take opportunity to downgrade stocks when it's obvious, but when they should be, they don't. So this is a joke. I mean, Morgan Stanley is not alone. I'm just pointing this out, but I mean, this is a joke. This is why I think most of you that are watching this do not deal with these large investment banks. Okay, you deal with your basic online platform, which is good. But these investment banks are in decline because of nonsense like this. This is a complete lack of credibility when you downgrade a stock after the stock's been declined for almost a year and a half, and now they decide to decline it with this news. I mean, complete joke, but that's typical of the investment banks. All right, let's talk about Apple. Apple has everything that was negative about Google, Microsoft, and Meta. Apple has all those tendencies, okay? Every single one. They're going to have FX. They're going to have demand issues. I mean, everything. And also this, not Meta's issue, but Apple doesn't innovate anymore. All they're doing is coming out with a new iPad, a new iPhone. They do a few tweaks here and there. There's nothing innovative anymore for Apple. And with declining consumer spending across the board around the world, Europe, China, et cetera, et cetera, et cetera, it is. I just think that whatever Apple reports, it's going to be about the guidance, but it can't be good. Okay, just take a look at what's happened today or the last week. It can't be good. So just be prepared for that. If you're an Apple holder, hold on tight. Let's switch gears to Europe. ECB. They're going to raise rates a lot more aggressively. They've already begun to do that. I mean, this is very aggressive. This could alleviate some of the dollar issues because I think there's going to be some push and pull of whether the Fed's going to pivot, whatever. Again, I just mentioned that, but the ECB has just started. Remember, they're 6 months behind us. Okay, so whatever issues we're going through, they're 6 months behind. They're just starting now to aggressively raise rates, and they're going to have to raise rates a lot more because their inflation is much worse. Now, the gas, as we've seen before, gas prices have dropped, energy prices have dropped in Europe quite a bit. Okay, partially due to demand, partially due to, again, imports of LNG, of gas from the U.S., from other places. This is why the U.S. GDP was so high, because we shipped a lot of gas, LNG, over to Europe. You're not going to hear this from the talking heads, but that's a reality. But even with this price drop, it's still not going to keep the EU, UK out of recession. It just isn't. It's inevitable. And the rising rates, EU is just going to, move things even quicker to, and they're already in recession. Actually, they're in stagflation because their inflation rate's still much higher than ours. So EU's got problems. The consumer in the EU, as we talked about, is a disaster. So we're going to continue to see problems coming out of Europe, despite what people might think would be the Europe starting to address their issues and energy prices down. It's still not going to deter anything. Look at the UK bankruptcies. Okay, talking about Europe, I know UK is not part of Europe technically, but it's still Europe. Bankruptcies are rising very fast. This is not good for the UK. The UK's economy is actually much worse than the EU. Now here's the positive spin on this. Think like an institutional investor long term. Don't think like a trader. Think like an investor. All of these things point to one thing. UK's got issues, but it's already built into the market. Look at the valuations here. UK equities are very, very cheap, especially relative to the rest of the world, relative to history. So if you're looking, okay, if you heard enough negative stuff from people like myself and you don't know what to do in the US and you say, hey, well, where can I find cheap stocks? What can I look at markets that are relatively cheap? Look no further than the UK. And one place to look is, and I hate promoting this, but I have to, it's ADR.com, which is run by JP Morgan. You can go in there, you can do a search by country, look at all the UK companies that have equities that trade in the US on the New York Stock Exchange or NASDAQ, right? So it's very easy for you to buy whichever brokerage account you have. So a lot of the companies you'll know, they're global companies. Take a look at this. Take a look at, ADR.com. Go in, find some companies. You can buy ETFs, whatever. I always like buying individual companies relative to ETFs, but take a look at it because UK stocks are interesting right now. Valuation. The news is still very bad coming out of the UK, but bad is good when you talk as an investor, when you talk about buying things for the long term. Warren Buffett, et cetera, value investors, this is what they look at. And you'll see people increasing their allocation to UK equities over the next 6 months or so. Another interesting opportunity, and I don't know if it's positive, but it could be very interesting. The final elections in Brazil are in on Sunday, October 30th. Brazil had its first round, so Lula and Bolsonaro are the two top candidates. I hate to even call them top candidates because it's the best of the worst. I guess the best you can call it. You got two flawed candidates, but those are the two people running, and those are the two choices for Brazilians. And on Sunday they're going to go, and they're going to choose the next president. What you got to know about Brazil is one thing. Brazil has probably one of the most independent. By the way, Brazil is the 7th largest economy in the world. Okay, it's not something to just poo-poo. They have a very independent central bank. Their central bank was raising rates a year ago. They raised their rates to over 12%. They crushed the economy, but they also got inflation under control. Not only that, they are now one of the few economies in the world that is reducing rates, which is helping the economy pick up. So Brazil, relative to again, everything's relative. Relative to the rest of the world, is in very good shape. The biggest uncertainty was the election. On Sunday, that uncertainty is going to be gone. Whether it's Lula, whether it's Bolsonaro, nobody knows. It's very close. I'm not going to make any political projections here. But after that's over, after Sunday, there's going to be less headwinds in Brazil. And no matter who becomes president, because you have an independent central bank and because they've been way ahead of the curve, right? Our Fed is way behind the curve. Brazil's been incredibly ahead of the curve. And the economy's bolstered by the fact that there's inflation everywhere and commodities are up all over the place. And Brazil's a commodity economy. So Brazil's a very interesting place. And again, I hate to say, but you go to ADR.com, look what Brazilian companies trade in the US, and do your own homework. But the market could actually rebound. But most importantly, over time, relative to the US, okay, everything's relative, it should be one of the big global outperformers. And so take a look at Brazil, take a look at the UK. UK is more of a long-term, cheap value play. Brazil's kind of, a turnaround situation. But two interesting places to look if you've just done with losing money in Meta and the rest of the tech sector here in the US. So finally, be careful of the Apple earnings. Just be prepared. A lot of potential negative news. And by the way, as we saw yesterday, the Apple stock has not reacted. It's been it's probably the best performing big cap stock in the US. Nobody wants to sell it. Nobody believes the negative hype, but just be careful. So when you're looking today to make some trades, looking past this weekend, looking into the end of the year, there are some interesting opportunities. But as always, investors, be careful out there.